Hello everyone, it's Calvin. Thanks for checking in on this fine evening on a Thursday, August 22nd, 2013. Let's get right into these charts. On the SPY, let's start it off, guys. Went right into my level. If you guys noticed, I mentioned in the last video that this gap fill area is going to be your first support. Sure enough, I said it can go as low as the low of the gap fill candle. Sure enough, that's where we went, and we got a nice candle, green candle today. Not much conviction on the close. I mean, you like to see a nice strong close above the 50. I wouldn't really categorize this as a close back above the 50. It's just not enough conviction here, and the volume is not the greatest, but you know, it is what it is. It is consolidating in this area at this support level. So let's see if we get follow through tomorrow. But this is support, guys, and almost went into this gap fill I mentioned earlier. So right in this vicinity, I did mention in my videos this is support. Sure enough, we are stalling out here, and potentially we could get a reversal here. If you guys recall my weekly analysis on a time frame of the weekly chart, I said, guys, to watch out for what? The 20-week moving average. And look, exactly, we kissed that beautifully, guys, and I believe today's low, and that's just, or I believe yesterday's low, and now you're making a nice, actually if we close Friday in this upper range, we do have somewhat of a nice little tail candle into a time count. So let's see if we can at least hold yesterday's gains, and that will be a nice little tail candle on the weekly print. Okay, guys, so let's keep an eye out for that, and that would be a close back above the 50-day moving average. Okay, so your resistance to the upside would be this. Now you confirmed you've been closing well below the 20-day moving average. So now on the way down, as this starts to decline, the 20-day moving average, which is my blue line you see on the chart, that will be resistance. Okay, for sure you could play that as an intraday, maybe day trade. If you hit that straight up shot during, let's say, next week or so, that could be a nice day trade to the short side, just for a day trade, because that will be resistant. That's going to keep this market in check because we did confirm below it, and this is this was major support before. Now it's going to be resistance, guys. Simple charting like this could just make you a lot of money. Okay, guys, look at this simple stuff here. Previous support here, on the way back up, resistance, as well as the 20-day moving average. Okay, and then you got gap fill just a little bit ahead of that, above that. So those are the levels to watch out for. You also have the 10-day moving average sloping down, so that should keep us in check. It looks like it will be kind of just compressed between, let's say in the next few days, between these two moving averages, if it can recapture, if price can recapture the 50-day moving average. Okay, guys, that's just a quick analysis on the SPY. Let's go on the IWM very quickly. Same deal. We never actually confirmed below the 50-day moving average. I mentioned that in the SPY. Don't get fooled because of this. Okay, guys, you get sliced through it on low volume. See this low volume candle, and it just kind of shakes you out. Nice reversal candle the next day, almost a bullish engulfing candle here. But sure enough, that is a reversal candle, and when we retested the 50, held it, and then there you go, you get a nice additional move up, and now we're getting a nice bounce. Your resistance level, like I said, just like the SPY, it's going to be, as long as it hits straight up and hit to this 20-day moving average, which is sloping down, that should be resistance. Okay, now that's on the way up, and you can kind of make a case that this was support before. This big big green candle on the way up should be some minor support here. As long as it meets at one point together, that should be solid resistance. And sure enough, your next resistance on the daily chart will be gap fill. Okay, at the 104 level. Okay, let's look at the Qs. Just going to do a quick update, guys. Just trying to not leave you guys hanging. And we already to consolidate. Actually, we're making a nice bearish pattern on the Qs here. And as long as you stay closing above, you got two moving averages here. I mean, you are bumping your head up against it many times. That does dictate that eventually it will break down, but you could make a case that this is kind of a bearish base that you're making after a down leg right here. Okay, guys, but you're still in a bigger uptrend. The longer term trend is up on the Qs. The Qs, I believe, was halted earlier today for some malfunction, but that was cleared up. But sure enough, you are getting a bearish pattern here. Let's see if it closes back above these moving averages. I have a more neutral bias. Right now, it's more of a negative bias as long as you stay below the 20. That's what I'm seeing on the Qs. Let's look at Apple. Apple seems like it's consolidating after a very nice move to this trend line here. Let's see where this trend line takes you. It always takes you a very important spot in history in the charts, and sure enough, this was that $500 level. support that was holding up for 2 months basically, and then it broke down, and now as it meets up into that congestion, it's going to be resistance on the way back up. Okay, simple support and resistance, guys. Very simple stuff. Ultimately, if it does have a little bit more room in the tank, it's going to be perhaps this trend line back test of this longer term trend line that it was riding way back. If I scroll back here, so let's see if that target is reached. It does have a little bit more room in the tank, measured off the measured move, but doesn't mean it doesn't pull back. Okay, doesn't mean it doesn't pull back first. Maybe let this 50-day, 20-day moving average catch up, because right now it is a bit extended from the 20. Okay, guys, so let this pull back, make a nice pattern, and it can go long. Maybe on a touch of on a 20-day moving average, and then it could proceed to its target. Okay, guys, which is in this general vicinity at the 530-ish area. That's just a general estimate, but let's go take a look at some of these other stocks that I've been going over. Let's look at HPQ, Hewlett-Packard. Oh, look at this beautiful trend line breakdown. That's just absolutely, I drew this trend line. This is your make or break point. This trend line, it's hit it quite a few times, so it dictates after the third hit it could break on you at any time, any moment. And sure enough, the measured move, I drew this in, I believe, a few days ago. This measured move, it did pretty much close right at that vicinity. So these are, these measured moves are just an idea of where they can, close at. It actually went up to my next line here, pretty much. But in this general vicinity, this was your measured move at the 2230, and sure enough, it closed, just a pennies off that, and it almost recaptured the 150-day moving average. So that's a beautiful drop. I looked at it was on earnings on HPQ. You don't like to touch a stock after earnings. You like to wait at least 3 days for all the forced selling and margin call selling to be done. So, if it does hit the, in the next few days, if it does crash into the 200 moving average, that would be a beautiful spot. But generally, after a big down leg, you can see it on a weekly chart. But you don't know how far the weekly chart candle is going to go. It could print way down here. But, we have to get one more day to print out a weekly candle. But usually after these long candles, you do get a pause week on based off the weekly chart. So it is very common that after you get a big drop, you get some sideways action, some consolidation. But we'll see how it plays out on that. Let's look at ANF. ANF reported bad earnings. It's just the not cool, uncool retailer for clothing, and people are catching on. Just that cool factor is no longer there. And I remember it used to be a very popular fashion among the youngsters back in the day, but that does not seem like the case anymore. Big drop on ANF, very bad. Look at the level that I drew in. Ultimately, this was your major level, the $40 level. We did actually open below it, so that's a gap play. It's known also as a river theory. Whenever you gap below a major support, on the way up, it's going to be resistance. So just keep in mind that to the 39 to 40 in this general vicinity, this is where you're going to find some major resistance now. Because, before, if I draw in this band of support resistance, it's generally in this vicinity here. This was, you go back in the hands of time. Let's go back to the weekly chart so I can go back a little bit further back in history. You will see that this was, right here at the $40 level, 39, it was resistance, resistance here. And if you go back, zoom in a little bit more, it was support here, broke through. I believe this perhaps would have been earnings as well, so you can't be surprised that it just kind of cut right through it. Earnings, you just never know. The move could be very extreme, and sometimes just pure panic and just cut through these support levels. And sure enough, right there, it cut through it, but then it broke back above it. But again, right here, let me just delete this. Let me just move this Fibonacci retracement over just a little bit so you can see what I'm looking at. See, or once again, support, flush through, resistance on the way up, pulled back, broke through, and then you got to think this is going to be an important support and resistance again. But we did pierce through it, but on a weekly chart, you can still close back above. So when you're going off a weekly chart, you actually always have to go off the weekly close. So it doesn't mean that this can't recapture a little bit more and close right at this pivot point. Okay, this is a very important pivot area. Okay, this is where it broke out in very heavy volume. See this breakout on huge volume, so that this is good. This is a major breakout on huge volume. So that's your breakout point, and you're pretty much in that vicinity right now. Almost went to the 75% retracement. The 618 is also in this area. Okay, if I move this trend line, the 61.8 Fibonacci retracement is also here. That's why I said that's some pretty strong support. Also, that breakout area. We go on the daily chart. You can also see on the monthly chart. I'm sorry. If you go to the monthly chart, you can also see that's a 200, but that's not very major on the monthly chart. That's just another confluence there. The 200 is just right there too, but that's not base. It's not an uptrend. on ANF. It's just pretty much a big wide range. You do not have an uptrend based on the moving averages on the monthly chart. The weekly chart as well is not an uptrend. It's a neutral trend. Look at the moving averages. No clear trend, just chopping sideways. And the daily chart, same thing. We broke the 200 moving average. That's a very clear sign right there. And actually, sure enough, if you actually measure out this trend line breakdown, it does actually take you to in that general vicinity. Okay, close a tad over that. So, and then that's also the gap window here. So you gotta suspect there's gonna be resistance now. See this gap window, and that's actually where we made the high. So it's actually a perfect gap play where you actually let me delete this. Let me just move over this measured move. I'm going to delete this as well. So this is a nice clear example how gaps, if you know how to play gaps, it's perfect. See how this was support here, okay, or this was the gap up, I'm sorry, and on the way back up, it's now resistance, okay? So easy, simple support and resistance, guys. And that, sure enough, was the high of the day. Let's see if we can get some kind of relief for rally. You know, after these extreme capitulation days, it's not unusual where you get some buyback, some buying back, and some quick covering here. But let's see how it works. Let's see how it goes. Usually, you usually get a pause day or a bounce. So let's see how that plays out on ANF. Is there anything else I want to take a look at? Let's look at Amazon really quick. Amazon. Like I said, the 50-week moving average was very important, or the 20-week moving average. As you see, pretty much got there, almost got there on Amazon, but now getting a bounce. Let's look at the daily chart. Daily chart, nice little reversal candle, but still in this choppy range. You can see the level very clearly that this previous, I drew this in before, this previous support now it's going to be previous resistance, now support here on the way down. So let's see if this holds. Nice little drop on Amazon right now. Right now it's nothing really much to do. It's just in this range right here. Let's see if it breaks out, but right now just pretty much in this range here. Clearly see that in this choppy range. So this could be a reversal or a bearish pattern. We gotta see. Let's go look intraday, see if there's any signs, if there's any kind of a double bottom reversal. But it looks like it has to clear that line for it to be a breakout. Yeah, it's just a nice sideways range here, and let's see how it plays out. It's got to clear this and then ultimately clear this right here to get a nice reversal on Amazon. Let's see. I think that's pretty much. Just wanted to go over a few charts for the week. I'm already done. Just did some nice bull put spreads on the SPY. Very conservative. Small gains, but until you see a clear chart setup, you can't really go long or short. I did cover the rest of my shorts at this at this gap fill. Did not look like it was going to drop anymore. It looked like it was going to get a counter trend bounce before resuming. Ultimately, I believe the ultimate target in the short term will be this trend line if it does get a little weaker. But once you start breaking the 50, that's that could open up a whole new can of worms because once you start closing below the 50, the chart's going to look more on the weaker side. Okay, but right now the chart is a chart. Right now it seems like we're in the makings of perhaps a counter trend bounce here, but you can't see it until it actually happens. But and right now I'm in cash. I just sold bull put spreads below this trend line right here in the 160 area. That's a safe way to go because ultimately, if you guys have been following me, I said this trend line should hold for the week, and sure enough, I put my money where my mouth is. I'm going to sell puts below this trend line because I know it's going to bounce if it hits this trend line. Okay, it's just the nature of the beast. This trend line's been very, very powerful. You still have uptrends on the weekly chart, monthly chart. That's how you trade it. Okay, guys, just go with the most the pretty chart setup, and you should be fine. The charts that are strong, just stick with the trend, and don't try to short. Don't try to counter trend. Don't try to counter trend trade. It's very hard to try to pick the top. Just always keep it short term, and you'll be fine. Okay, look at this nice, beautiful uptrending chart on the monthly chart as well. So that's why I'm not afraid to sell bull put spreads because I know the bounces will come because we have uptrends on all the major time frames. Okay, guys, enough of me rambling and going on and on. I'll let you guys have a good night, a good evening. I will talk to you guys next time. Hope you guys have a great week trading, and I will talk to you guys later.